Spring 2021. An American company sold $75 million of its own stock. It never touched a dollar. Every share was paid for in Bitcoin, Ether, or USDC. No fiat currency was accepted. Wall Street said no once. Then it said yes. They called it the first ever public offering directly inside a cryptocurrency wallet. J.P. Richardson, March 2021. We can keep Wall Street out. They sold $75 million of stock and refused to take dollars. Two buyers wrote 80% of the book, and they sold the stock before they had picked the chain. Exodus Movement, a self-custodial crypto wallet founded in 2015 by J.P. Richardson and Daniel Castagnoli. Richardson is CEO. Richardson, March 2021. We are very profitable, but for us, this isn't about needing the money. This is about us going out and creating a new market. His own pitch email. $50 million on our balance sheet. And no formal board or VCs. They filed in February, qualified in April. The book opened at 9 p.m. Eastern the same night. No investment bank. CFO James Gernetsky. We did not use an investment bank. We did not go through Wall Street to do this public offering. No third-party escrow. Bitcoin, Ether, or USDC only. Regulation A. Not an IPO. Every qualified share sold. 27 days. Over 6,800 new shareholders. So what were they actually building? First, the money. Two buyers wrote 80%. One later shows up in the filings as Alameda. Everyone else split about $15 million. Same price, not broad in size. After it closed, retail investors who bought a couple shares got the exact same deal as billionaires. 7 months later, no fiat had been accepted. 45 million of USDC sat on the balance sheet. The headcount is real. The money is 2 checks. They wanted Ethereum. Richardson, March 2021. It was going to cost up to $9 million to issue the stock there, so we're currently shopping around for other blockchains. Then, that's just crazy. So we are blockchain shopping right now. The circular names Ethereum 37 times and Algorand 0 times. A February high of $252.33 against a $27.42 share. What they were building: a digital representation of the Class A common stock. If the tokens were too complicated or too expensive, we could be perceived as having failed to live up to our business mission. Offering closed 5th May 2021. The Algorand asset was created 2 days later. The company announced the chain 16 days after the money. Tokens released June 2021. Frozen by default. Millions of tokens, not a pilot batch. Para's own description. A representation of shares of Exodus common stock. They sold the stock before they had picked the chain. The token is the receipt, not the asset. The company wrote, "The common stock tokens are digital markers. They are devoid of any legal rights or economic value. Securitize, not Exodus, creates and deletes the tokens. It reconciles the share register against the ledger at the time of any transfer, and again on a nightly basis. Same count of shares and tokens. So they built 2 marketplaces on the receipt. Both were gone by the end of 2023. The shares came back. The founder signed a letter. The migration to T0 was not an effortless process for most of you. Inside the same window, 2 restatements, and the auditor changed from Witham to Deloitte. They went OTCQB, then OTCQX. The ATS lane did not carry them to liquidity. A national exchange did. The second review opened with 47 comments. In March 2021, the staff had already asked whether a blockchain share register is inconsistent with the National Clearance and Settlement System. June 2024, the staff quotes a company representative. The common stock is tokenized on the blockchain. The company answers, the company will not use the phrase tokenized on the blockchain. The regulator made them retire the industry's favorite sentence in writing. After that, would anyone list them? Yes. NYSE American approved the listing. The company told shareholders it would open 9 May under Exodus. The day before the open, the exchange delayed it. The May 9 open never happens. Richardson to decrypt. Surprised and confused. Then 7 months of nothing. Will the bell ring? No 8K. No 1U about the delay. Earnings still had the company OTCQX, Exodus. On the cover page, under name of each exchange on which registered, it said NA. It did not change. Through the silence, the staff keeps writing. The company concedes the tokens can, however, be used to initiate the transfer of the Class A common stock. Then, we have completed our review of your filing. Completing a review is not a blessing. USD American certifies the Class A common stock, the only cert in the company's Edgar history. Trading begins on USD American at the open. OTCQX through the close the day before. 223 days after the intended date, the stock closed around $53, up more than 37%. JP Richardson. Exodus is thrilled to uplist on the USD American. It's crucial that America's innovative companies can trade on America's premier stock exchanges. In November 2024, they told the SEC the opposite of a victory lap. Token usage would meaningfully decrease once USD American was the predominant market. There would be no economic benefit to coming back for a token. They also said they would keep making the tokens available. 10 months later, they did not fade. Shareholders may hold Class A as common stock tokens on Solana, a second transfer agent, Superstate. The old sentence is gone. There is currently no public market for our common stock tokens. Is in one 10K and not the next. That is a deletion. They did not say a market now exists. The Solana mint is real, frozen by default. Supply as of August 2026, 60.0 whole tokens. The press release said expansion. The ledger said 60. Both chains are live. The 2021 Algorand asset processed transfers in August 2026, 5 years after the raise. 3,319 non-zero holders as of August 2026 counted off the ledger. They predicted fade. They extended the program. The ledger is still running. Usage was never disclosed. June 2026. A second thing called tokenized exit appears under the same brand. Exodus Markets, with Ondo. 200-plus tokenized stocks and ETFs, including Exit, inside the wallet. The company's own launch materials. Tokenized assets are not the same as owning the underlying securities and do not provide shareholder rights. Same brand, same ticker. Nothing else legally. The 2021 common stock token is the transfer agent recognized record. The wrapper is not. The 2021 token was the other kind. Permissioned, reconciled nightly, a receipt. The stock that closed near $53 on debut trades at $7.77 as of August 2026, more than 85% below its post-listing high. First half of 2026, a net loss of $50,751,000. The FY 2024 profit was a $96.1 million gain on digital assets. The mechanism worked. The rails are not the business. So did it work? The tokenized trading venue died. The tokenized record did not. A real company's real equity went from a crypto-only Regulation A raise to USD American with a blockchain receipt on the transfer agent's books the whole way. The receipt survived every venue built to trade it. That is the claim. Not that the company thrived. 2021, keep Wall Street out. 2024, America's premier stock exchanges. Same person, both filed. That is what arriving looks like. Subscribe if you want the letters, not the press release.